Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview presentations. Today, we want to talk with Gerald Panneton, the CEO of Terra Resources. Hey, welcome and good morning to Canada. How are you doing?
Very good. Thank you. Very good, John. Yes, it's a pleasure for me to be presenting the Terra story today.
Yeah, fantastic. Thanks for taking the time. And we have been traveling already together in November, and I was super impressed, as always, from your presentation. I'm a shareholder of the company. I really should disclose this also, and I'm a long-term shareholder because I think 2022 will be an exceptional year for the company. It will be a turning year because they are drilling a lot, and by hopefully year end there will be a resource. So let me put up the presentation. I would say, Gerald, the floor is yours.
Thank you very much to all of you. And of course, yes, very exciting. I think in 2021, we finished the year with the announcement of an important acquisition or option to purchase an existing or past producer in the Yellowknife camp, which is very, very important to the story. Without due request, we're going to go through a presentation today, which was updated this morning. And with all of this, I'd like to go from the forward-looking statement to the cautionary statement. Everything is in the public domain, and you can find this presentation if you want to look at it again on our website at goldterracorporation.com. Thank you very much, Johan, again. A snapshot of the company is very simple. We are located in Canada. We run the business from Toronto. We have a project in Yellowknife, which is a gold camp, a very known gold camp in Canada. And for myself, I have a biography. I mean, I don't want to spend too much time talking about it, but if I put a mine in Yellowknife in production in the near future, it will be my fourth gold mine during my career of geologist. And for those who may not know, you can look at what I've been able to achieve at Detour Gold, which was taking a company from $140 million market cap to selling the company for $5 billion years later after finding more than 16 to 20 million ounces in reserve. I'm surrounded also by a board that has worked with me for many years, and it's very experimented and ready to be developing the next mine. Now, what is the value for shareholders is on the next slide, which basically outline you the importance of the resource. We already have a resource of 1.2 million ounces in two satellite pits north of town. So Yellowknife is a 20,000 people town. It's got very good infrastructures. It's got a mining philosophy, a mining mine, because they used to be a mining town, and now it's servicing all the diamond mine of Northwest Territory. So it's a very dynamic town. It's not a dying town. And of course, when we signed the deal with Newmont to acquire the purchase option of the Con mine, which produced more than 5 million ounces on the Campbell Shear at 15-gram gold, half an ounce. You know, 15-gram gold, half an ounce is worth $900 US per ton. Very, very profitable value for a ton of ore underground. They also put $1.5 million in the company at the end of November. And the reason being, they wanted to take a stake in the company because they like the story, they like the management. And if you look at how many junior managed to sign agreement with Newmont over the last 2 years, very few. Newmont doesn't put his money where it doesn't think it's going to be just for putting money in. They like the story, and of course, our drill program has already outlined some very good results, which we will talk about. 2022, our objective is to define an additional 2 million ounces on top of the 1.2 million ounces we already have. And we're going to be drilling the Campbell Shear. The Campbell Shear is the gold plumbing system that generated 14 million ounces of production in Yellowknife. We're going to look at it in a minute. Yellorex will be drilled on 50 meters spacing because it's near surface. And we're also going to be targeting much deeper drill hole.
Gerald, one short question. Will
Yes.
you also upgrade then from inferred to indicated maybe parts?
Well, you know,
Resources?
when the question about infer indicated is because you need to have more technical engineering studies to go along with the resource. So our resource of 1.2 million ounces is already very good. It's probably could be qualified as indicated. But because we didn't do this in the process with a PEA, preliminary economic assessment, or a PFS, and we didn't put any engineering in it, despite the fact that it's drilled properly, it will be indicated if I had that in the PFS without drilling anymore.
Okay.
So it's already like a very good resource at $1,300 gold. What we're trying to do here and we want to have measured, indicated, and inferred. That's very important. But here, what I'd like to show you is very important. I think what's important here is the importance of the Conmine deal. The Conmine deal, just happened. Our stock is 25 cents, 20 cents Canadian, 25 cents Canadian. The value has not been created. The market cap of our company is currently about $40 million Canadian, maybe $50 million Canadian, somewhere between 40 and 50. Skeena did a deal on the Conmine in 2017, which is the graph above the slide that you see there. And Skeena went from a valuation of, nothing, 650 million share, no answers, signed a deal with Barrick in December 2017. Now the company is worth $1 billion. Not bad. $1 billion. The stock is $16 Canadian. They have about 65 million shares outstanding. They did 2 rollback since 2017 because they had like tremendous amount of shares. We don't. And they found about 4 million ounces at 4 grams. We're just at the beginning. So you can see that over a period of 2 years, it took a long time for Skeena to get re-rated because they had to put a PEA, a pre-feasibility study. Our goal is that we're going to have an updated resource by the end of the year, supported by our drilling in 2022. We know we're going to have a resource update. We know we're not going to stay at 1.2 million ounces. Our goal is 2 million ounces, maybe more. And our goal is to have it in measured, indicated, and inferred sometime in the end of 2022, early 2023, and jump into a feasibility study. There's no question we will have a re-rating eventually if we find those 2 million ounces, because we already have 1.2. So everything we're drilling now is to be added to what we have. Added with 10 gram material plus, which is $800 US per ton value. So very good opportunity to gain in the future. And with all of this, what is the Conmine acquisition? The deal is very similar to Skeena and Barrick on the SK Creek mine in British Columbia. They put money into us. We would like to purchase the Conmine liability. We want to have 100% of it. Look, I've been working with Newmont for 2 years. It took me 2 years to have an option to earn 100%. 6 million ounces of gold have been produced from the mine. It shut down in 2003 when gold was $370. Newmont never spent a penny except for reclamation on the property over the last 14 years that they've had the property after the Miramar acquisition. There's still 650,000 ounces of proven reserve and probable reserve, plus all measure indicated at a grade of 11 gram, which is right above the 10 gram focus we have. The property is not big compared to our land package, but it's critical. It's right next to the town, the little purple block. When you compare the extent property land package we have of 800 kilometers, but it is key when you look at the location of the Conmine and the Campbell Shear. The Campbell Shear, like I said, is the most important plumbing system for gold in the Yellowknife camp. 14 million ounces of gold. A zone that is 10 to 30, 40 meters wide, dipping to the west. So you drill from west to east. And next slide will show you a compilation of what 5 million ounces look like. So you can see the envelope in green, and what you see in yellow, pink, and red is what was mined. So you can see the grade time to thickness. So everything that was above 20 or 5 grams over 4 meters, which is 20, which is yellow, is your outline of the high grade. And before the new deal signed with Newmont in 2021, I did not have access to all of this. I had an earning to earn 60% of a small portion of the property. And I told Newmont, I said, listen, we got to get real here. We need 100%, and we need to be able to explore everything. There's already 750,000 ounces potential left on the mine. And our focus basically will be to drill where the stars are every 200 meters spacing as a first pass in 2022 to outline the continuity. And as we know what's between Yellorex and 1,000 meters, we will then go deeper in the next phase of drilling, say in the second half of 2022. We are intending to get more than 40,000 meters of drilling. We know very well that the potential, the Campbell Shear is there. There's no question. Look at the Yellorex result. 20 grams over 5 meters and 4 grams over 11 meters. 2 zones. That little Yellorex zone that you see there is 2,000 ounces per vertical meters, 6,000 tons per vertical meters. So if the zone is 200 meters in strike length, 300 meters of depth extension, already you can say, oh, you got 500,000 ounces. Great potential. We're just going to extend it. Look at the red dot beside the red star. 14 grams over 5 meters. With some underground drilling done 25 years ago. I know that there's been some drilling, but remember, the yellow is there. The green is the envelope. So we're not out of the Campbell Shear. The Campbell Shear is 70 kilometers long. And we're exploring the down dip extension of 5 million ounces of gold. There's a great chance to find more gold on this property than there is anywhere else on the property. This is the best target that we have along the Campbell Shear. And that's where we're going to be focusing in 2022.
Gerald, how deep do you want to drill? Will you go down like, let's say, 2,000 meters, what I see here?
I don't think I will need to go to 2,000 meters. You see, the up dip, and this is an interesting question that you asked, Jogan. The up dip of the deposit, you can see that the West Bay Fault on top of the slide is cutting off the deposit, and it's the giant mine that is moved 7 kilometers further north. Late faulting, very late faulting. But the deposit is 5 plus 8 million ounces, so 13. You can see that the pot fault that you see in the middle of the screen is cutting off the deposit, and everything is moving south. And there's almost no displacement, but there is a displacement. But it was never drilled enough at a large spacing, except for Yellorex. And you can see right along the boundary, there's a hole where 3 grams over 12 meters was intersected. The potential is there for another 10 kilometers to the south. But we need to start close to the mine because this is where we think we're going to have the best grade and the best value. Yellorex is already a zone that will enter in our resource by the end of the year. We're already drilling it 50 meters. The rest below Yellorex will be drilled on 200 meters spacing. And we firmly believe that the depth we can reach is step by step. So you can see the first step is 1,000 meters. Once we have success, maybe in all 5 holes, we're going to go deeper, 1,200 meters, 1,400 meters, 1,600 meters.
Would that old mine, let's say, help you in the future production scenario? Meaning, is it still in a shape that you can use something?
The Robertson shaft, which goes down to 1,900 meters, and that's the main reason for the option to purchase the Con mine, is an infrastructure that could be revitalized, refurbished, dewatered, and be used because it's a shaft that is done. It's a 10 by 20 feet shaft or 3 meters by 6 meters. It was done in the 70s, and it's a single shaft, and it's a steel concrete shaft. So it's not an old wooden shaft that was done like 70 years ago. So we know the Robertson shaft can be used again.
Super.
And the value of a shaft like this could be $100 million if you use it again of saving. Now, just to talk to you a little bit about our drilling, we need to show you the drilling on Yellorex, which is on a 50-meter spacing as we speak now. So we have one rig drilling deep and one rig infilling the Yellorex deposit, which will be part of our measure indicated resources that we plan by the end of 2022. So some of the drilling, you can see it here. There's multiple holes. We're showing you all the best hole. And if you want to look at the section, a cross section to show the deposit, the next section shows you hole 22, which intersected the 4 gram over 11 meters in the hanging wall, followed by a second zone of 20 gram over 5 meters. Very continuous with hole 14, which is below, and somewhat continuous with hole number 3 that was drilled in 21. We understand the Campbell shear. The Campbell shear could be 50 to 100 meters in true width. You could have multiple zones. In this case, we see 2 zones. And the comfort level we have in terms of following the zone and drilling the zone will help us get to our minimum requirement to option the purchase of the con mine for minimum of 1.5 million ounces, all categories. The deal is in favor of Gold Terra with a very good back end if Newmont wants to come back in if we have 5 million ounces. It's a great deal for our shareholders, and we're here to create the value for them. And with this, if you want to have more question, we have our catalyst on the next slide. Basically, we're drilling. In 2023, we would be doing a PFS and initiating baseline study if we have 2 million ounces plus, and eventually make a decision on a feasibility study sometime in 2023, 2024. Starting the baseline study for environmental and impact assessment, stakeholder communication, consultation, will all be part probably more in 2023. But first, 2 million ounces plus. And we know we have the ground to find it and define it. But on top of that, this is adding to our current 1.2 million ounces. Our 1.2 million ounces, excuse me, is probably valued at $30 an ounce as we speak. However, if we bring another 2 million ounces at 10 grams, this whole combination of 3 million ounces altogether becomes a lot more valuable for any shareholders, including myself. I own almost 3% of the company. I can tell you they become a lot more valuable because what you need to build a mine is a good deposit. And we know that the Campbell shear can deliver that. With 2 million ounces, we know we could afford to build a mine. Maybe we'll set it up near Crestaram. And by setting it up near Crestaram, we could then take the Crestaram pit. And the Crestaram pit is an interesting pit because the grade of Crestaram pit is 6 grams of gold. So already that 6 grams per gold is worth $360 US per ton. We can do a lot of open pit at that value. I built Detour, which was a 1 gram deposit. I know the economics of a low-grade deposit, but combine Crestaram with the con mine, and the company would be producing 200,000 ounces of gold, very profitable, in Yellowknife, in town, when everybody goes home at night. Once Crestaram is finished, just to show you how much you can advance a project, conceptually, with a good option, is the Crestaram pit will become the tailing impoundment to continue with con mine and continue with the Samoto deposit, which is another 800,000 ounces. And Miss Pickle, which is also a high-grade open pit. There's a lot to be done. There's no question. But we know exactly what we're doing. We've done it before. We have the experience. We have the support of the board that understand. And with a valuation of $30 an ounce, that could be 100 or more eventually. We can see Skeena, $110 an ounce. We know we will be able to realize value for our shareholder because we know it's so cheap now, it's time to buy.
Definitely.
And with ESG, we establish always very good communication. Joe Campbell and myself, we've done it before. And the best way for ESG to be successful is very simple. Communication, visibility, and always listen to your stakeholder. If you need any question, here's my email, and I will be welcome to listen to any of your questions and answer them personally. Thank you very much for your time.
Super. Thank you very much, Gerald. That was a great presentation. You even convinced me again, definitely. And I will get some more shares. That is also for sure. Question, I saw in your press release, you want to drill like 40,000 meters today. That's quite a lot. So what might it cost, and how does it look like with the financials?
Well, it's an overall budget. I mean, I could say I want to do 40,000 meters of drilling. Hopefully I can do it in 2022. If not, it will extend in 2023. But when you get into a feasibility study mode, because you have 2 million ounces, you would be spending a lot of money on drilling. 80% of the cost of a feasibility study is drilling. Prove up the deposit at a spacing, at the drill spacing that makes it a measure indicated. Eventually, Absolutely. You may even have in your budget to drive a ramp into Yellorex to infill drill. Or maybe you reuse one of the access from the con mine to go and do a lot of drilling from underground. There's a lot of benefit of the con purchase option agreement with Newmont. But the first thing is that, can you delineate a 2 million ounces resource, infer and indicated? That will allow us to go forward. As you know, if I could, I would drill 100,000 meters if I could this year, but you have to go with your success. If there's no success, you scale back. But if there are good success, we will scale up.
For sure, that makes sense. Absolutely. Let's say, as we saw in your timeline, feasibility study, stuff like this, will Newmont support you there, for example, technically also? Because I could imagine it's maybe in their interest.
Yes, of course. I think it would be the interest. But, you know, one of our directors at Terra is Mr. Louis Dion. I've been working with Louis for the last 28 years. Louis was senior VP mining at Barrick for many years. He was Campbell mine manager when Peter Mong bought Barrick and the Campbell mine under Bob Smith. So Louis is, in my mind, one of the best mining engineer. And between him and I, we will orchestrate the best feasibility study. Look, I've put 3 mines in production in my career. And you know, Detour is probably, of course, the one that people remember, but I did 2 during my Barrick days. Louis and I together will be putting a very good feasibility study that Newmont will just be blessed with. It's about the people. If you choose the right people to do the mining, to do the metallurgy, to do the environmental impact assessment, to do everything that needs to be done, you're doing a good job. Costing a project is a tough job because in today's world, there's a lot of volatility on pricing. I wouldn't want to be building now. I'm hoping that there's going to be, you know, a stabilization in the cost of things. Because if you want to build now, this is not a good time. Labors is skyrocketing, you know. But you know, I built Detour for $1.5 billion Canadian in 26 months on time. Maybe not on budget, but on time. It's very important. And at the same time, gold price dropped 17 to 1,100. So we had a tough year in 2013. So we know $1,800 gold is a great price, no question. But if you do all your calculation at 1,400, for example, or 1,200, and your project is economic at 1,200, you know you'll be profitable. And the main reason why I would not just do a low-grade deposit on its own, the benefit of Gold Terra is a high-grade deposit. You're not investing too much for a much better benefit.
Absolutely. Super. That was a great final sentence. Thank you very much, Gerald, for the last 25 minutes. That was great. And
my pleasure.
Yeah, wish you all the best. And we look forward to more drill results, good drill results, hopefully. And I would say, hit the drills hard. And we want to see here 2 million ounces this year.
Definitely. This is our goal to achieve this year. And we look forward to do so.
Super. Thank you very much. All the best, Gerald. Thank you. Yeah, ladies and gentlemen, that was Gerald Panneton, the CEO of Terra Resources. And you heard it. The drills are turning. They're really going full throttle since 10, 12 days. And yeah, approximately 40,000 meters is the drill plan. If achieved this year would be great. then also next year is also time to do so. But what is really important, they want to bring out a 2 million plus ounce resource here, also with fantastic quality, which they can use maybe already for a PEA and also pre-feasibility study. That is great. And I would say Gerald has built 3 mines in his life. He knows exactly what he is doing. And for that, the stock price of Goldterra is way too low. Probably a great buying opportunity here. Check it out. Thanks for watching us, and bye-bye from Switzerland.